I was talking with a man just today who was very distressed about his Coinbase 1099 DA. All he traded on was Coinbase. He bought on Coinbase, sold on Coinbase, everything was on Coinbase. He felt he had made maybe $80,000 of profit that year. But the 1099 DA from Coinbase showed $2 million in proceeds. And he said, this number can't be right. I said, wait. The proceed number gets higher and higher the more you trade. If you have $10,000 worth of coin, you buy 10,000 of that and you sell it for another 10,000 of that, another 10,000 of that, that's how you get the 2 million number. But the real issue is the amount of the cost of those transactions goes up too. You're looking at the difference. I said you need to focus on the difference. And the problem this year is that Coinbase isn't reporting cost basis to the IRS, and very few people trade exclusively on one exchange. And therefore, the information on the 1099 DA is only a partial view of a taxpayer's perspective. And it puts forward large numbers, which can get the IRS excited. A lot of crypto investors think that the exchange handles all their taxes because of the 1099 DA. But no, with the new form coming out, many exchanges will report the sale price, or what's called the proceeds, but not the cost basis. And that is creating a lot of scary information for investors. The good news is the IRS knows that this first year is a transition year, and they're not really going to be too worked up over these large numbers. In simple terms, what is cost basis in cryptocurrency? Well, cost basis is the price you paid for the asset that you sold. So, for example, you have, say, Ethereum, and you had bought these Ethereum at $10,000. Now you exchange that Ethereum for Solana when the price is up at $12,000. Well, the cost basis is the 10,000. Why do so many investors lose track of their cost basis? If you don't keep receipts, well, it's extremely difficult to keep track of your cost basis. I have only met one person in my life who said they could do it using a spreadsheet. In fact, it is just impossible. I've actually had to go have migraine medicine just trying to do it myself for other people. It's hard to remember the prices. And there's so many numbers that float through our heads when you're a crypto trader. It's hard to remember the real ones like cost basis. And if you move coins between exchanges, between wallets, back and forth, split lots into different groups, you just can't keep track of it. Here's why. So you take $10,000 and you put it into Coinbase and you buy USDC stablecoin. Now you take 7,000 of that and you go off and you buy Ethereum. Take another 2,000 and you buy Cardano, another 1,000 you buy Doge. Then you decide to move this to your private wallet, and then you decide, well, I need to move it over to this other exchange because that's the only exchange I can swap Doge for, whoop-de-doo coin. So then you moved it over there, and you don't remember what you paid for it originally because you also had taken some of that Ethereum and sold half of it and made Doge coins out of it. And how much was that? Oh, it was that $3,500. Now you're mixing it in with this $1,000 you had before, but you don't remember that months later. It just gets confusing because you're in and out, you move it around, you split it, divide it. You just can't keep track of it. And that's why it's hard. If you were to buy and sell everything just on one exchange like Coinbase or just on Kraken, then that exchange would know what your cost basis was. It would track it. But once you start going off exchange, then that information gets lost. If you keep all your coins on Coinbase and you never move to a foreign exchange, you buy them on Coinbase, you sell them on Coinbase, you trade them for other coins on Coinbase, then Coinbase knows the cost basis of everything you did. But when you move some of those coins off to a private wallet to keep it on your own keys, and then you move that coin back at a later date, Coinbase does not know what you paid for it. And if it doesn't know the cost basis, then it'll only show proceeds, and profit is the amount you're taxed on. It's up to you when you file your tax return to report it. Well, they expect you to report it on Form 8949, which is kind of like a spreadsheet, which lists the total proceeds for short term, and then you list what the total cost basis for those same amounts are. So that leads to the total profit for short term. Same thing for long term. On your tax return, it's imperative that your tax preparer enter in the information from the 1099 DA. You don't see it on the tax return, but it's kept in the metadata when it's electronically filed, and the IRS will note that you accounted for that 1099 DA. And that's what they're going to look for. You definitely want to account for it. If you fail to do that, then the IRS will say, hey, there's some 1099s which were not accounted for in the tax return. We're going to issue a examination letter called a CP 2000 letter to the taxpayer and assess more taxes. So you don't want that. The second thing that the IRS is doing is they're going to start more audits of digital assets than they have in the past years. The IRS is going to look at your 1099 DAs, and they're going to ask to know what the cost basis is of all the transactions reported there. And that's going to be very demanding for you if you have not prepared ahead of time. And then if you don't answer cleanly and clearly and are able to prove, not just state what the cost basis is, but prove from transaction records what the cost basis is, then that will lead the IRS to ask additional questions. What records should every crypto investor keep from day one? We know all those annoying emails you get from your exchanges confirming that a particular trade had happened. Do not delete those. Keep them all forever. We had one client who was going through an audit, and he had traded on an exchange that had since gone defunct. It didn't exist anymore. He couldn't get any records from them. But the IRS saw that there were transfers into his Coinbase wallet from this address. We were able to prove that that address was that exchange, and we were able to pull emails from the person's email account showing that corresponded to those exact same dates, which were basically transfer acknowledgments. Now, these acknowledgement emails were pretty weak, to be honest. You'd want it to state so many coins of a certain type at a certain maybe cost price that day were sent. You want some details. These emails were horrible. Basically said, hey, we completed your transfer. But from that alone, because he still had those records in his email, we were able to prove that these were all related to that other exchange, because Coinbase was trying to treat them as income and taxing the whole thing. So never delete those emails. The second thing for best practices, we recommend that people periodically, at least at the end of every year, do a dump of all the transaction records on your exchanges, not only capturing the transaction records in a permanent file that you can keep for later, but also you want to do an inventory of how many coins you have at the time. Gone are the days when they would recalculate all your gains, because they would get lost in a quagmire of details. Now they're just pushing in on the cost basis for the transactions they know about. And if you stumble, if you answer incorrectly or incompletely, you may simply be opening up for more investigation and a deeper audit, making things actually worse for yourself, which is a major problem, which is why nobody should talk to the IRS by themselves without a tax professional who's knowledgeable about digital assets. If you do get selected for an audit, the IRS is going to ask you to prove the cost basis for the transactions listed on your tax return and on the 1099 DA. And if you don't have your records together, this can be very embarrassing. It's very important that you not try to do this yourself with the IRS. You should work with tax professionals that are highly experienced in audit defense, extremely knowledgeable about digital assets, because they can speak confidently to the auditor, because most of these auditors are undereducated on crypto assets. So we need to pace their understanding and expectations on what we can give to them and explain why that is. So it will save you a world of hurt and panic if you work with professionals.